The AI revolution has taken over, and Apple has the bankroll to lead the way into the future. In the second segment of this video, we're going to take a look at some of the fundamentals, how much money this company is actually making. And in the third segment of this video, we're going to take a look at the charts, technical analysis. This is going to tell us when to buy into this company. Stay to the end because we're going to be implementing proven, successful strategies on how to buy at the right time so you're not guessing. I've been trading and investing in the stock market for over 25 years. Apple closed August 15th, 2025 at $231.59. We're going to look at the market cap over here at 3.4 trillion. The average shares traded per day is 56 million shares traded per day. The current PE ratio is 35, and it currently pays a dividend yield of 0.45. When we look at 2020 revenue of $274 billion, the net income was $57 billion. When we fast forward to 2024, the revenue increased to $391 billion with a net income of $93 billion. That is a revenue year-over-year change of 2%. And we have an operating expense of 4%. The net income is a negative 3%. The net profit margin is down 5%. And then we also have the earnings per share is up 10%. Now these numbers are going to show up in the charts. They're currently looking at Apple. We're looking at a 20-year monthly chart. And as you can see, if you invested in the past 20 years in this company, you would have made a lot of money. Going forward, it's going to be hard to get that exponential growth, and we're currently in a downdraft. Owning this stock, you want to own it in ETFs. You want this to be part of your portfolio balance because this company, they make a ton of money. As far as giving you that 200, 300, 400% return anymore, that's going to be extremely challenging when these companies get this big, but they are great companies to trade, and you're going to be at less risk. When you trade a company, a large cap company that makes a ton of money, it's easier to trade, and I'm going to show you how. And this is a 1-year daily chart. Now the market's been in a bull phase, but Apple has been in a downward draft. We have a consolidation period, and it's recently bounced out of that. So what is Apple doing now, and when can we get in? We're going to draw a channel from the top of this range. So it's currently broken out of its consolidation range of about 3 to 4 months here. We've broke through this channel. So now we're off to the races. This is a good sign. What the technical analysis is going to do, it's going to give you the house edge. It's going to get the percentage ratio into your favor as far as being right or being wrong. The stock market's going to crash. The stock market's going to go into correction phases. Nothing is guaranteed in the stock market. But what technical analysis is going to do, it's going to increase your percentage of possibilities. It's going to increase your percentage ratio of probabilities, which is going to ultimately increase your profitability. So right now, the stock has broken through this range, and we are going to have a level of resistance. The top of this range, $250 at 260 is going to give us resistance. Right now, currently, it looks like to me, this stock in the next several weeks is going to push up into this range here. There's no guarantees. This thing can turn around and just get hammered tomorrow. You just never know. But the percentages are in our favor. I'm looking for this range here, 250 to 260, and then I'm going to reevaluate the position. But what you want to do is, if you want to get in on this, we're going to look at the moving averages. The 10-day is the white line, the 21-day moving average is the purple line, and the green line is the 50-day, and then our 200-day moving average is the red line. And as you can see, we're out of alignment. The 200-day is essentially after 10 days, so this is not a good, healthy structure or healthy pattern. It really isn't. And the reason why the moving averages are all over the place because the stock is all over the place. But with a company being this large, you can trade in and out of this, and you can put tight stops in, and you can make some pretty decent money doing this. You're not going to be right all the time. You're going to lose sometimes, and you just have to protect your downside. Managing that risk, that's the key to surviving. So for example, right now, the stock is extended above the 10-day moving average. You can't buy right now. You have to wait for the stock to come back and meet the 10-day, and then you can take a second position at the 21-day, and then you can take a third position at the 50-day. That is going to complete our analysis. I hope this was helpful. I put some links in the description of trading platforms and financial institutions so you can set up your account and start building your retirement portfolio today for your future. Always remember that the markets are risky, and the key to success in this industry is a well-balanced portfolio. God bless and happy investing.